Good afternoon. I am Scott Forcino, an associate broker with Real Brokerage out of the New York City metro area and the founder of PlugIntro, where real estate professionals meet who they should know. I'm very pleased to have Clarissa with us today, who is from Green River Capital, a mortgage broker, and also spearheaded and began the movement with the Florida Relocation Team, in addition to the law enforcement team as well. So tell us what's going on with you and New York and Florida and what's new.
Well, there's a lot of new things going on out there in regards to mortgage guidelines and some of the things that the Florida Relocation Team is doing. We just recently were at a party. We had a Florida Relocation party on the 30th of March. That went really well. We had about over 50 people. We're very, very grateful on how many sponsors we had that were supporting our team. Just to name a few, we had Alicia Grande. Do you know who Alicia Grande is? She invented the lash and eyebrow serum. It's one of the top products at Sephora. She was one of our main sponsors, and all of our guests walked away with a little goodie bag with best-selling products from Sephora. We had our friend Tia Maria, who's a big supporter and promoter of the Florida Relocation Team. She's also our event coordinator, sponsoring our party as well. Of course, Green River Capital was a big sponsor. Heather Gallagher, she does insurance for commercial and residential. Omega National Title Services, just to name a few. So we were very grateful to have that many people supporting us.
Great. Yeah, I attended the event. It was a beautiful venue and some good friends and very influential people. It was a real pleasure. And the rooftop in West Palm Beach was a really great place.
View, right?
What a view and what a venue. Well, you mentioned what's really new, and I'm hearing so much about this disputed credit adjustment, where people are thinking that based on May 1st, just 1 or 2 days ago, there were people with bad credit, make it easier to understand, are getting better deals, better rates, better loan programs than people with good credit. So what is the truth?
Yeah, that's not necessarily exactly how it works. So the truth is there's always rate adjustments in the mortgage business based on credit scores. So now they have softened up the hit to the interest rate if you have a lower credit score. So the interest rate, the cost of the interest rate is cheaper now for a buyer that has a lower credit score than it used to be, but it's not necessarily cheaper than the rate a client with perfect credit would qualify for. And I think that's where the misconception is. We're getting a lot of angry buyers.
Yeah, I'm hearing someone who closed not too long ago said that they have almost 800 credit score, 20% down, and their rate is not what they would be happy with. They asked if it's appropriate to refi, and people with much lower credit score and less money down are getting something almost close to what they have, and they worked real hard to keep their standards extremely high, and there is some disappointment. So we really need you to let agents know and clients, what happened.
So please do not ruin your credit. If you have perfect credit, you still get the best rates available. However, it is cheaper now if you have lower credit scores for for the homeowner to be able to afford home ownership. That's really what it's about.
So what was the point of this, to make home ownership more available?
Well, rates are so high right now, not so high as in comparison to what it used to be. So that's the perception. So it's to make it more affordable for people with lower credit scores. It's not actually making it more affordable than for those that have perfect credit. That's where the disconnect is.
Is it making it home ownership even possible in some cases? Is that what you're saying?
Sure. I mean, we actually have a lot of flexible products out there with FHA financing, for example. Not every bank may have access to this. You might have, mortgage brokers have more flexible products, but I can do a loan with a credit score as low as 500. Of course, the interest rate will be higher. And of course, there are additional guidelines that would apply. But there's a lot of flexibility out there, and you can even now, one of the other products that came out recently is you can do no money down with FHA financing now. If the client qualifies, there are certain criteria related to income limits and so on. So basically the lender would do 96.5% financing like FHA normally would, and the minimum down payment required of 3.5% would come in the form of a second mortgage given by the lender. Of course, both come with a higher rate because there's no equity. So interest rates are based on multiple factors, not just credit score, but how much of a down payment you're giving. If you're giving no down payment at all, the interest rate will be higher than somebody that's putting 3.5% down.
So that 3.5% down, the 3.5% second loan is a tiny, tiny second.
Exactly. Then that's a good point. So the interest rate on that is pretty high. It's 9.75, but that could be a loan of $20,000. When you analyze that, in the whole scheme of things, it really doesn't have a big weight on the monthly payment. Let's
take that further. There's no prepayment penalty, so someone could buy a house and then save up to pay off that 20%.
That's correct. Yeah. And that's a good point. If they just focus on paying that off first, they'll just end up with a first mortgage. It's still at a higher rate, the first mortgage. Let's say if the FHA rate is in the 6s, when you're doing 100% financing, you're going to be in the 7s. But once you pay off that second lien, you can refinance into a lower rate now because you have the equity.
And what are the loan limits on that program? FHA?
The loan limit is based on the county, how many units the property has. It's different depending on the scenario, but they're high enough.
Now, why do real estate agents still to this day have an aversion to FHA? What's that common misconception? When you talk to agents, how do you treat them and teach them that that's okay if it is? What do you think?
Well, there's a misconception in the industry that FHA loans take longer to close. That's not necessarily true. Obviously, it depends on the lender that's working on the loan, but there's also some additional guidelines that apply when it comes to the appraisal. And that's something you can easily screen to make sure it's not going to be a holdup. And as long as you're educated about the guidelines, it's something you can address that shouldn't delay your closing, or you can set the expectations up front. With FHA financing, the appraisal will be more sensitive to the conditions of the property. But one huge misconception that I see is real estate agents think that a repair I'm trying to think some examples that came up. I think repairs is a big one. They think a repair is a problem with FHA. Anything that impacts the safety of the property is going to be an issue with conventional financing as well. There's just very little specific things like peeling paint.
It used to be handrails and roofs. It used to be
those are issues with conventional as well. That's the misconception. If you have a bad roof and you have a leak, that will come up whether it's FHA or conventional. So that all got like grouped into this big category that FHA is a problem. So anything related to repairs is going to be an issue, whether it's conventional or FHA. Okay. Anything that's a safety issue, like the hand railing, like you said, mold, things like that. But the peeling paint is very specific to FHA.
Yeah, that makes sense. It's always been the case in the New York City area. Right. What about the, really non-conventional products like the non-QM? And what does non-QM mean, and how can agents use that to help buyers?
So non-QM is basically a whole group of mortgage products that we have where the client is qualified with non-traditional sources of income. Just to name a few examples, one of the very popular products that we have is the bank statement program. And that's really designed for your self-employed borrower who may be in a cash business, like a dry cleaners or something. So if you look at the tax returns, they have so many write-offs that the income is minimum, or they may have a loss. But if you look at their bank statements, they have average deposits that are consistent. So the lender can do a look back for 12 months or 24 months at the bank statements and actually use the average deposits instead of the tax returns as qualifying monthly income.
I see. And what kind of down payment is usually associated with that?
Down payment will depend on the type of property and occupancy, but you could do a loan with as little, I believe 10% down with that if it's a primary residence.
That's a really competitive program.
Right, it is. That's a very popular one. We also have another very well-known product is the DSCR, and that's designed for investors who may have 20,000 corporations. They don't want to show all their income. They want to streamline the process. or maybe they're not showing all their income. Instead of qualifying based on tax returns and getting all the income paperwork, we basically look at the cash flow of the property. So as long as the rental income, the market rental income supported by comps covers the mortgage payment, that's how we qualify the loan. We do not look at the client's income.
And that's only for investment properties. That's not for primary.
It's only for investment properties, yes. But I do have a couple lenders that will do that product for first-time home buyers, which you can't find. Not every lender will do that.
Well, I think there's a huge gap between what really exists that you're describing now and what realtors, no disrespect to realtors, may not be this conversant. And really, I mean, you have buyers clicking on Wells Fargo and Citibank and Chase, where they would be far better served by working with someone like you that give them so many more options. There's
so many products out there. There's just two that I mentioned. I mean, there's a little more flexibility in states outside, aside from New York. So if you get financing in Florida, Connecticut, New Jersey, we even have products that if the client has good credit and a large down payment, 25, 30% down, we can actually do, I don't know if you remember the old no doc loan.
Sure.
No income verification. We just look at the assets and the credit. So we can even do that. That's no longer available in the state of New York at the moment.
Well, I mean, how recently have those come back? Because they were gone for a long time.
So to be honest, we had it available, including in New York, up until, I want to say, maybe about a year ago. And then when rates moved up, we saw a lot of changes in the products. And New York is more regulated. It takes a little bit longer to get certain products approved. So the bank that was doing that in New York discontinued that product, but they're still available in all the other states. And they've been around for a couple of years now.
Interesting. Wow. Well, one thing I believe so strongly, and I know you do too, is education, because this is a industry that obviously changes minute by minute in the realtor side and even more so on the lender side. And if agents are given the chance to access information from someone like you or an appraisal service or a title company, I think they're far better competitively than the people in their market. That's how they can serve someone who would appreciate this next level type of professionalism. That's what, and I really applaud people who take part in PlugIntro, which gives people a chance to learn more about them and also gives the agent a chance for them to be heard by their clients and contacts. It's a small world, as we all know, and it's really about using the power of loose connections to benefit those around us.
Absolutely. I mean, it would be nice to get the same type of education that we're giving here today on mortgages from a realtor, what's going on their side of the industry, a title agency, so we can all be educated and make sure we're taking advantage of, everything that's out there, all the resources.
There really are some. I was in a local mastermind not too long ago, and I tell you what, I learned a lot. And one really top level agent gave a great explanation to sellers why the buyers are, why the market shifted. And they give it, I don't know if I could repeat it exactly, but the low rates before were tied directly to, were way less than the high inflation. Now the inflation got to the point where those rates are no longer sustainable, and the mortgage interest rates had to go up to compete. And that really means many fewer buyers. And that means why prices, except in resort areas that are cash-based, have come down. The prices have stabilized. There's really no more appreciation.
Right. Or it's going to be very little is what I'm hearing. I mean, it will still appreciate, but it might be like 1% per year versus what it used to be.
Right.
It's really market. It depends on the market. It's, it's different in different price points. You see different reactions to the market, I think.
And that's a good point, because agents are really, really now trying to explain their market conditions to where they are, because what you read or hear on the national news, this does not apply, of course, to all areas.
Correct.
And there's far more services now available to agents who can explain a micro market, where they would explain that here's the trend, here's what happened from 2018 till now with the huge blip of the COVID and post-COVID appreciation, because there was a scarcity. But I mean, without that local knowledge, if you're listening to these, like we just described today, if you look at social media or even on the news, you see these misnomers that the government is penalizing top credit buyers. And
Yeah.
that's sensational, but I'm glad to hear that it's not true.
Yep. Got a lot of text messages on that in the last couple of days. Yeah. No, that's not true.
Yeah. But depending where you are, you may, that level of information plus the loan programs is really not available. And tell me how you work with these agents. How do you get that information to them and let them know that you're a resource and a partner with them? Conversation, media, what do you do?
I do a little bit of everything. I mean, I do a lot of networking. I go to networking events, both, as you know, both in Florida and the Westchester County, New York, Bronx area. I'm on social media a lot. I'm not on every platform out there, but I am on Instagram, Facebook, and LinkedIn. I do some seminars to educate realtors and make some connections there, and PlugIntro.
Yeah. Well, I think it's so important to get people real-time data because look how much has changed. Imagine if we had this conversation about 15 months ago, who would have thought people rejected 3.5% interest rates at that time?
Right. Absolutely.
Right.
Absolutely. And the rates are not that much higher. I mean, these days you can do a buy down and you can be in the 5s. You can do an adjustable and you can be in the 4s with an adjustable, believe it or not.
Right. And people, I spoke to one other lender. That's a great idea because basically people are not taking adjustables for another old-fashioned fear that it's going to run through the roof when you're not going to live in the house more than 15 years anyway.
Right. Right. And I agree with that. If you can do a buy down on a 30-year fixed and be in the 5s instead of the high 4s, you're better off, and then there's no pressure to refinance. If rates come down and it's worth refinancing, you can still take advantage of that, but at least you're securing that rate and the property in this market, right? Because we know if rates come down again, once they do, you're going to have the whole wave of buyers again. And I don't know what that's going to do to the prices. It's going to get very, we might get more bidding wars now.
Could happen. We have a national election coming up, so you don't know how that plays in. You don't know.
Right.
But
we have a shortage of inventory still.
Well, another great point around that the shortage of inventory, it is not based on existing homes. Do you know that from 2010 till present day was the lowest incidence of new construction since about 1920? So it's 100-year low I don't know if you followed this because it's not just what's for sale. It's that there's no place to go in a lot of areas. You may think there's a lot of building, but the building from 2010, the crash made people so skittish that builders did not build. Look it up. It's crazy how few new constructions there have been. And it's even gotten less from just before COVID through COVID. We're at an all-time low of new construction.
Right. So if you have that shortage of inventory, which I'm seeing both still in Westchester County, the Bronx, and South Florida, and rates drop, I would imagine the market is going to go up again. You're going to have bidding wars. And that's why I think it's important, if you have the opportunity to lock into a property now in this market and just do a buy down, you can always refinance and drop the rate later on, but you're locking in the property. I think it's going to get worse if rates come down.
Right. And you mentioned buy down. There's that. I mean, I have a view or two. I want to hear what you think. When you say buy down, that means who pays and how much is that buy down?
So a buy down, basically, as a consumer, every buyer has the option to buy down the interest rate. So basically, they would pay a fee, which is called points, and it's a percentage of the loan amount. So every 1 point equals 1% of the loan amount. And that buys down the interest rate. So let's say if the market rate is 6.5, and how much they buy down depends on the market. It changes every day, but you might be paying 1 point and reducing your interest rate 0.5%. So it's 0.5% below market. And in some cases, the point is tax deductible. So it's worth, doing the analysis to get the interest rate lower. But there's also a buy down available on the seller side, which is the temporary buy down, where the seller can buy down. The seller has to give a concession towards closing costs for the buyer to be used towards buying down the interest rate to make the rate more affordable. So it could be done by the buyer, or it could be done by the seller in the case of a purchase.
Right. And I know that a lot of agents just coming out of this last market don't know how to present that as an opportunity, asking for a contribution. And I also know that sellers may think that you're drunk because everyone else just sold. And why am I giving any money to any buyer? This is crazy. There's that perception. They're still thinking of the prior market, which is only 12 or 16, 18 months ago, not even maybe, right? It's not that old, long ago, because there was such a rapid increase. So those are the two options. What a broker has explained to a group that I was part of, said, listen, why don't we skip the buyer? Why don't we start from the seller who says, I'm not going to do a price reduction. I'm going to build in my contribution right off the bat, advertise the home with a lower monthly payment, just like if a Chevy is $349 and another car, Ford, might be $389. Right. So start off with a lower payment and take it out of the buyer's hands, take some control and market the property with the understanding that you're not actually giving a concession, Clarissa, because it's not money in your pocket. It's part of an asking price, which is imaginary anyway. It's hopeful. Right. It's an inspiration. So people have not gone that road. To me, a buyer, having an agent, asking a seller's agent, ask a seller's 4-step process. It's hard versus a sharp realtor with your assistance can structure the transaction where it's like a radio volume up and down, how much you want to contribute and how much lower the rate can be.
That's a great strategy. It's very creative marketing. I think that's a great idea if they do that up front, because it's all about perception, like you said, but really it's no different than a seller's concession. We're beginning to see that, except it's limited to being used towards the points for the buy down. So you're providing your buyer with a benefit. If they're looking at 2 different homes and you're the only seller that's offering that, that becomes an incentive. So it does help the seller as well.
Right. But it's not, I mean, some appraiser made a distinction to me. Doing a contribution is only within the seller's discretion. You don't need a higher appraisal and you don't need even agreement by the buyer. Of course, they would agree, but you don't need their input. You don't need the confusion. You don't need any kind of roadblock. So if a seller says, hey, I'm selling my house, I'm going to give 4% to, and Clarissa's going to run the loan, that may reduce my rate by 1%. Sometimes 4 equals 1 if you think. I don't know. So that means your house the seller's house will be far more attractive.
Absolutely. Yep. And that's coming up still. I just had a conversation with a buyer and a seller recently. There was no real estate agent involved, and we discussed structuring it that way, so the buyer will feel more comfortable.
Well, you ever hear that expression by Warren Buffett, when the ocean goes out, you see who was swimming naked? Ever hear that expression?
Mm-hmm. Yeah.
Well, the tide went out. So these are the type of strategies and innovations are required to really stand out, be the chosen professional in your field. And it only comes from education and collaboration with colleagues and people that you find of a greater skill set, like yourself.
Absolutely. Yeah. Like you said, there's so much out there. It's just that people are not aware of it. So much we can work with. Even we were talking about new products now. Conventional financing came out with 1% down for primary residences. Again, you have to meet income limits. There are certain guidelines that apply, but we can do 1% down now.
Right. Well, that's something, because conventional wisdom, when you listen to your uncle, I never heard of this. And agents, they'll always let you know what they never heard of, but they're not in the market day to day and learning about these programs. Is there some way that you can, let me ask this question, because agents want to get their offers accepted and sellers will review offers. So what can you say to those different parties that make them comfortable with a 1%? Because that sounds, hey, that's sketchy. Only 1%. They may not be great buyers.
Well, we can get creative with that as well. I've educated buyer. I actually educate the buyer at the pre-approval level that they may get some resistance on the 1% down payment offer, because then there's no skin in the game, right? At the end of the day, the seller wants to know that if that buyer walks away from the transaction, there's enough of a down payment that they can hold on to for committing to selling the property to them. So what they could do is the 1% down payment does not have to be the same as the deposit that they're giving to the seller. Those are two separate things. So that buyer is going to have more than 1% because they have to pay closing costs. So let's say they have a total of 5% available for both down payment and closing costs. They could do 5%, a 5% deposit, which is what I would recommend. And then the lawyers could structure the contract of sale so that at closing, only 1% of the deposit is going towards the down payment. And then the difference could be credited towards the closing costs at closing. They just cannot walk away with the cash. That's, you know, because at the end of the day, once the client is approved for the mortgage, the seller's getting their money no matter what. So it no longer
I agree. That makes sense. But I'm going to tell you, I think that is extremely sophisticated what you just described, because 1% to the uninitiated would be scary. And years ago, there used to be people saying, oh, you know what, 20% down. And they put 10% on contract. And then no one knows that the bank brings 90%. Did they really think you're going to have another 10 and then 80? You know what I mean? It used to be, say 20, you of course give the lawyer 10, and then the bank will give 90. But nobody, including the lawyers, cares if you come with enough money.
Right. And it's the same with VA financing. With VA financing, because I came across that many times with realtors, you know, asking me, how am I supposed to make this offer when you're giving me a pre-approval letter at 100% financing for a VA buyer? Again, they're still going to give a deposit that could always be credited towards closing costs. That's how we address the seller.
That's true. Well, that's all about the presentation, and that all comes from relationships, which all comes from trust and respect and collaboration. But I think, you know, I want to touch on one point. You're talking about New York and lawyers, and that's Southern New York. So you're and I have been in this micro spot in the world, but you know, people, it's thought in other states that you can lose a down payment. But I will tell you, and you speak to the other fancy lawyers, you know that it's very close to impossible to lose a down payment in New York based on the way it's structured between the attorneys, that it doesn't happen. It takes some court action. So this skin in the game you're describing really is just something we all have to overcome, because it doesn't really happen. There's an entire body of law that is a tough set of hurdles to achieve. So really the sellers are at a disadvantage. I always think that the sellers are in control until the contract, then they're not.
Right. Yeah, it's very difficult. I mean, as long as, you know, you're applying for your mortgage in a timely fashion, you're aware of your mortgage contingency date, and you're doing everything you're supposed to do. Like you said, it's very difficult for that to happen. But it's a little bit differently in other states. You know, New York, we have a little more flexibility on closing dates. I do see things are more stricter in Florida, for example.
Yeah, I heard that Florida is a closing date
right, because in New York, like Christmas. Your typical contract of sale, as you know, will say on or about whatever closing date. That automatically gives both parties flexibility to close 30 days past the estimated date on the contract, and they can still get an extension if, you know, if agreed.
Of course, sellers. It's such a gray area, and Florida people think that that's insane. You're going to go 75, 90, or even more days. I've seen 120. That's crazy, but it's really important. Now, because you're a principal in the Florida Relocation Team, how do you go about explaining the nuances and the different customs and practices between New York, who there was an exodus to Florida over the last several years? How do you get people to understand the differences?
Yeah, so that's a good point. So that's even why we put together the Florida Relocation Team. With the influx of New Yorkers coming to Florida after the pandemic, we saw a big need to educate those buyers on the Florida market because it's so different. If we just use that as an example, what we were talking about, in Florida, the closing date is pretty much firm. Sometimes we get a contract of sale and the closing date is 2 weeks away and the buyer's getting financing. So we have to analyze the type of product that they're getting to make sure, it's feasible to close within the 2 weeks. And I always recommend mentioning upfront if more time is needed, because depending on the market, not every seller is flexible with giving an extension later on. So it's better, just in my opinion, to bring that up in the beginning of the process. But there is no on or about. The closing date is what the contract states. And we don't necessarily have lawyers in Florida unless the title company has legal representation. It's usually the title agent and the realtors that are pretty much running everything, as you know.
Yeah, I find that interesting. And I found it interesting that they could run title that quickly as well.
About 2 weeks. Yeah, the 2 weeks is average versus in New York with the municipal searches, we've seen sometimes 60 days, depending on the county where the city is. Yeah.
You cannot control the city workers, that's for sure.
Yeah. So it's important, sometimes you have people that bought multiple properties in New York and they're trying to invest in Florida and they think they know what they're doing, but it's completely different. And, they don't even know half the time. They don't have a lawyer that's watching out for all those dates on the contract, and they have to be educated so they don't lose their down payment.
Sure. I mean, I've handled where people sell a house for cash in, let's say, Westchester, and have a big dollar figure, and they just wire it to the title company and wait for a closing.
Yeah. Very different.
That's the way to go. I mean, that's an interesting approach. Well, listen, I think it's really fantastic that you have connected the two states that are so comfortable with each other based on tax reasons and climate reasons, and even just what formerly was a resort. People live and enjoy the back and forth with family and business.
Yeah, and what's funny, I'm beginning to see a lot of realtors wanting to work both markets now as well. Go back and forth between New York and Florida. Interesting. They're beginning to analyze for their personal reasons, investing in Airbnbs, fix and flips, but now also beginning to see, how can I work both markets as well? So I'm still seeing that, influx of people purchasing. Now it's changed a little bit. Before it was more relocation. I'm seeing a little bit of everything. A lot of people wanting to invest in Florida as well.
Mm-hmm. And those are not necessarily snowbirds. Those are snowflakes who come back and forth.
Yeah, and a lot of young people.
I've heard that.
That's the other thing.
Sure, because they've sometimes been priced out of New York. They've lost that chance of the American dream, and they've lost the urban experience. Look at rents and purchase prices of the 5 boroughs, or Long Island, Nassau, Westchester. It's gotten completely out of control. Northern Jersey, Southern Connecticut. Look at that megalopolis of the challenge presented. How's a kid out of school or even a young couple going to possibly get through that?
Right. Yeah, it's interesting. And with the shortage of inventory in South Florida, I think that's why we're also seeing a lot of people buying, fixing, and retaining, not necessarily flipping now, retaining for long-term rental income or Airbnbs, as I mentioned.
Right. Well, it's an exciting time, Clarissa. I'm really impressed with your transition and the value that you bring to your clients and referral partners. I know you're with the right people between your professionals that you associated with, and have a great fan base, even people that wish you success and cheering you on.
Thank you. And we try to, the other thing that the Florida Relocation Team does is we try to, when you have people relocating from New York to Florida, they may also have a need to sell a property in New York. So we can also refer a real estate agent to help list the property, a good lawyer. So we're really helping them on both sides, not just Florida, but also New York, and also connecting them with other professionals. They may need a new CPA if they're moving here. They don't know who to get homeowners insurance from. So we're connected with direct insurance carriers, insurance brokers, because they both service different types of transactions, just to make sure we're giving them options.
Right. And I'm glad you mentioned your regular day-to-day. You need a dentist. You don't know which Italian restaurant. You don't know where you may get a car wash. You may not know where, where some social activity might be, but you need the day-to-day. I was at a chiropractor today. You need a relationship and a referral to get you that.
Absolutely. if they need an appraiser. We're constantly expanding our network to be able to help them. Moving companies or try to, we're getting more discounts for them through moving companies as well, whether they're moving locally or from New York to Florida, just trying to really add value every day.
I think it's fantastic. I'm really impressed that you did it before anyone else did. I don't see any competition. I'm happy to be proud and to be part of it. And it's supposed to be fun too, right? If your work have been fun at work, you never work a day in your life. So that's.
Oh, we have fun.
I know that.
We do both.
Some of the great communities that people use here that were formerly just vacation spots, now they're a place to live and work.
Absolutely. And we have another networking event that we're going to be doing this time in Greenwich, Connecticut, coming up for the Florida Relocation. It's going to be on June 22nd. So any investors, home buyers, anybody interested in the Florida market, they'll get to meet the whole team. There's 3 of us, title, real estate, and mortgage. And we're going to have a lot of our partners there, insurance agents, moving companies that they can connect with.
Sure. I'll definitely help promote it. We need to let agents know that that's something they need. And also let's make sure our agents get a chance to promote themselves to be of more value and gain more exposure to their clients and contacts. That's why we're here.
Absolutely.
Okay. Well, thank you, Clarissa. Fantastic job as always. I learned a lot. We're going to assemble the largest possible audience of yours to educate, inform, and to make better agents and make clients happier than they were before.